going forward past 2025, we're going to have huge moves in silver and gold, but it could be the year that silver starts to take off and outperform gold. That's my forecast for 2025.
I think what's really going on is major asset managers, hedge fund managers, mutual fund managers who've been around a while, have some experience and haven't forgotten the last 10, 20 years. Gotten all gleeful because of the stock market. They're somewhat suspicious of what they see in the stock market. There's all kinds of valuations that just don't make sense. The longevity of the market doesn't make sense.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
The steepness, the recent steepness scares them because it's blow-off type action, and blow-offs end very badly the other way. So I think there's some smart money out there that's saying, hey, I'm not going to get out of the stock market, but I'm going to shift some money out. 5% here, 5% there. And I think what they're doing is it's moving into those asset categories, safety of T-bonds and gold and silver. I think that's why those two markets are moving in sync right now. Don't expect it to continue. Because ultimately, yes, the T-bonds will go down in price, up in yields, because if inflation persists, which we think it will, then you will suffer if you're long the T-bonds. I frankly think we're topping right now. And I have been thinking that we're in a topping process for several months now. That doesn't mean it can't go up. I mean, you're up until you're down, right? Joe Granville said that. But we have numbers below the markets, both on the NASDAQ 100, which is our leader index. There's no question it's been the leader. It's outperformed everything. The top 5-6 stocks in the NASDAQ 100 constitute over 50% of its weighting. We all know those symbols: Amazon, Apple, Microsoft, Google, etc. They also constitute probably about 25% of the weighting of the S&P 500. So as these indexes have moved up, it's not because of all the symbols within the index. It's primarily because of the leadership has been so strong. And therefore, focus on the NASDAQ 100 because that's where the leadership is really weighted. We see numbers below the S&P and below the NASDAQ 100 that aren't that far down there. Now, considering that we've had a dozen-year uptrend, which is highly unusual, and a lot of that's been vertical, it's scary. And it's scary because if you're a price guy and you're looking at, let's say, a weekly or a monthly price chart of the S&P or the NASDAQ 100, and you look at your screen, try to define where you think it breaks. Try to draw a trend line. It's almost impossible. Because you might draw one and then it goes up at a steeper angle. We have to draw it again at a steeper angle. It's like multiple lines. So there's no line that touches 3 points. It's just a curve. The problem for the price chart technician at this point in time is when you turn down, there's no consensus as to where, oops, it broke something. And when you don't have a sense of, where you are on the map, emotions can take over, panic can ensue. So it's going to be an interesting game this year. There's a lot of stuff's going to happen this year, not just the beginning of stuff, but actually the culmination of many of these turns. We try to put blinders on. I mentioned that I saw the front page of the Journal today, but I don't try to pay attention to what other people think or what other factors might be in play here. There are major factors in play, big fundamentals in play. We all know that. In our last weekend report, we had a Fed funds rate chart going back like 30 years. I mean, you just look at the silly thing and you say, no wonder the stock market's gone vertical for a dozen years. It's a zero, and for 10, 12 years, no wonder the stock market was inflated. We've had inflation for, many years. It just didn't go into commodities until when asset managers again did what? Change their preferences from stocks to undervalued commodities that have less risk, probably more reward. And sure enough, that's what's happening. So now we have what the public and the Fed call inflation. In fact, we've had it all along. It's just been expressed elsewhere in a vertical stock market. So I think that bubble's going to burst. Not that the flow of money from the Fed or the ECB or the BOJ is going to stop. It's just going to go elsewhere because people aren't going to put it where the Fed would like them to put it. Now, what's the central bank going to do when the debt markets they must defend are breaking down? Are they going to taper? Are they going to raise rates? I think not. And I think gold knows this. Basically the central banks of the West are caught in a historical dilemma of their own creation. And they're going down the swirly along with their policies. And I think they're going down the swirly this year. Where will money want to go? As you know, it's been said cash is trash. Major asset fund manager said that some months ago, and he's dead right, and he's not even a gold bug. So I think the public is getting aware of this. And then we come to another interesting issue that's been debated on a lot of the financial channels lately. In fact, I saw something today on it. Bitcoin or gold? Well, we measure them both, but we've been watching the spread relationship between the cryptos, especially Bitcoin and gold, and Bitcoin and silver. Because our bet's on silver. We think silver's going to vastly outperform gold. I think silver's going to leave gold behind on a percentage basis. But that spread is measurable, meaning the spread relationship, the valuation of Bitcoin versus silver. Well, clearly over the last, since Bitcoin's been around, this is a baby. It's only been around half dozen years or more. It's thrashing. People can't quite put a valuation on it. But it has definitely beat gold and silver in an irregular manner, but in an upside manner. Very violent, just like its price has been. Those charts to us look vulnerable. In other words, it looks like we could be nearing a point where Bitcoin, on a valuation basis, relative basis, could top out versus gold and silver. And then they could replace it as the place where people are putting their money for safety reasons. And it wouldn't surprise us to the effect that, okay, the shift has occurred. It's time now to shift out of Bitcoin and into gold and or silver, preferably silver. Now that doesn't mean Bitcoin's got to go down. It just means that Bitcoin will shift relative performance such that silver will beat it going forward. And I think that's about to happen. Ultimately, this time, I don't think there's a way out. And by that, I mean, you're not going to end with policy working or a Volcker comes in and ends it, and just puts the brakes on and stops the process. Of course, then you went down. We all know that once that happened. The stock market was a wasteland from about 1977 through 1982 at least, while gold and commodities outperformed it. But this time I think it's more, meaning I think at the end of this next crisis, and I think we're headed for one, not just in pricing, but in that, you're going to have people raise the question, it's been 50 years of this stuff since that Republican Nixon took us off the gold standard, international exchange basis of the dollar. And we've had nothing but fiat currencies in Europe, here, and Japan since then. It hasn't worked. We think we've been under control, had a policy and all this nonsense. And it's just been a boom bust cycle, getting worse and worse each time. And it wouldn't shock me, what a world this is to say this, that the ex-communist countries of the world have gold-backed currencies before we do and set the new trend. And I think that's likely to happen, where we end up with stable currencies. It could be crypto, Crypto at least can't be hyperinflated. It can be expanded somewhat year to year as they find more, et cetera. But it can't be, double the money supply every year like the central banks can do. So it's going to be an interesting year. And I think the markets are going to create what I call a swirly. And that swirly will affect not just markets, but people. It's hard to predict these things, but I think the trend is pretty evident. And we know that the wave effects will create all kinds of unusual outcomes that a lot of people can't, it's not on the tip of their tongue right now. Political events, social events, and so forth that perceived to be traumatic, but actually will be healing. Because if you get rid of something bad and it makes some noise while you're getting rid of it, that's the way it works sometimes.
And I think 2025 could be the year that silver, I'm not saying it's going to be silver's year, because I think going forward past 2025, we're going to have huge moves in silver and gold, but it could be the year that silver starts to take off and outperform gold. That's my forecast for 2025. I mean, gold and silver have been really steady, especially gold. Since the beginning of the century, it's returned almost 10% a year, and this year it's returned like almost 3 times that.
Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Silver's up 28.71%. Versus the dollar. So its performance has matched gold, which in my opinion is leaving a lot of room for silver on the upside. And I think 2025 could be the year that silver, I'm not saying it's going to be silver's year, because I think going forward past 2025, we're going to have huge moves in silver and gold, but it could be the year that silver starts to take off and outperform gold. That's my forecast for 2025. I'm sorry, I don't have exact price forecast. That's always very, very tricky But as I said, they're going to continue, to sink, the fiat currencies. And the only way you can measure fiat currencies is versus gold and silver. Some people might say, oh no, it's against Bitcoin. I'm sorry, it's not, because even though Bitcoin might go to 200,000 by the end of 2025, we could see it down to 40,000 before it gets there later on in the next few months. That's how volatile and dangerous it is. And I still think the base for savings, long-term savings, is physical gold and silver. But anyway, the exploration companies, they haven't even dug the gold out of the ground. They're not producing. It's more speculative. They're drilling to try to find the resources and hopefully developing their finds into a mine by selling to the bigger companies or trying to build it themselves. But the major mining producing companies, they're like a mint. They're going to be the next central banks, even though they're not central. They're going to be producing the reserves for the next, the new monetary system, in my opinion. It's not going to be the Bitcoin miners, right? And that's why the central banks around the world, outside the West, well, even in the West, countries like Poland, they're buying gold hand over fist because they know what's coming. This current debt-based system is on its last legs. So I'm trying to tell you that I think you need to be strong and believe in the fundamentals and not let change your path. And I mean, gold and silver have been really steady, especially gold, since the beginning of the century. It's returned almost 10% a year, and this year it's returned like almost 3 times that.
Concerns about global debt levels and monetary policy could continue to support gold prices. As governments worldwide maintain loose monetary policies to manage their debt burdens, the risk of future inflation remains a concern for many investors. Experts like Mario Innecco states gold and silver's steady value, noting 2023 gains of 28.7% in dollars and over 35% in euros and Swiss francs due to monetary easing and rate cuts. He predicts continued currency debasement, reinforcing gold and silver's role as reliable stores of value. During the 1970s, when the United States experienced significant inflation, gold demonstrated its potential as an inflation hedge. As the Consumer Price Index, CPI, rose dramatically, gold prices surged from $35 per ounce in 1971 to over $850 by 1980. This period served as a powerful example of gold's ability to preserve wealth during times of monetary instability. Let's get back to the interview.
Gold and silver have been very boring, of course, if you compare it to this tech craze, this AI craze. I'm not saying AI is a bad thing, but I think people are getting ahead of themselves. So I've looked at some numbers today just to give you an idea of what's going on and what I think is going to happen in 2025. It's always tricky making predictions, but I'm going to make it. If I'm wrong, I'm wrong, and I'll admit it. But looking at where we are today, and I took these prices from 8 a.m. It's actually 20 past 8, but you have to take a price somewhere, even though the price of gold and silver, they trade almost 24/7. They're probably the most liquid metals in the world, I would say, because they're money. But anyway, back on the 29th of December, 2023, gold was fixed, AM fixing in London at 2,062.40. And for this exercise, I took gold at 2653.60. So up 28.66%. Yes, it's falling behind the tech space and Bitcoin. Am I concerned? No. I think it's a good thing. Gold and silver are still under the radar, nowhere near to being overbought. But even that I don't buy into. I think, unfortunately, our fiat currencies, they're going to continue to sink, and gold and silver are going to keep going up not because something new and special has been found about gold and silver, but it's because they've been around for thousands of years and people have always valued them. And when everything around you loses value because of the credit bubble unwinds, that's what happens. It's very simple. So in pounds, we closed the year last year at 1622, and right now, or a few minutes ago, we were at 2100. So that's a 29.47% rise. So you can see by that number there that the dollar is slightly higher, has outperformed the pound versus gold. So it hasn't been debased as much, but very, very little difference. But the currencies that have done really badly are the euro and the Swiss franc in terms of the major currencies. I haven't looked at the yen, but it's even worse.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.